Okay, May 28th. Feels like we were just doing this, doesn't
It
it?
really does. Picking up the thread again.
Exactly. Picking right up from yesterday, diving into today's market action. So another deep dive using the summary we have here, really trying to, unpack what actually mattered today.
Absolutely. It's about finding those key insights, especially on days when the big numbers maybe don't tell the whole story.
Right. And speaking of those numbers, looking at the indices, kind of quiet, leaning down a bit. S&P 500, the SPY, that finished down 0.58%. Dow Jones DIA down 0.57%. NASDAQ QQQ, a slightly smaller dip, down 0.44%.
And the Russell 2000 IWM?
Yeah, the small caps, they had a steeper drop, down 1.05% on the IWM.
So, like the summary said, a relatively small range day overall for those main indices. No massive drama there.
Pretty much, just a drift lower. Which,
Yeah.
that's where a deep dive really begins, right? When the averages are kind of slow, you got to look underneath.
Exactly. And the summary points towards Tesla, TSLA.
Yeah. What's the story there?
Well, it notes that Tesla's actually been trending higher pretty consistently, really, since back in April.
Okay.
And it's generating what the summary calls nice, orderly price swings.
Nice, orderly price swings.
Yeah.
I like that phrasing. It kind of touches on something we look for, doesn't it? That predictability. Sort
Yeah.
of.
Yeah. And the summary mentions Tesla's history, its tendency to trend well. But crucially, it adds that caveat, past performance isn't future behavior. Things can change.
Always got to remember that.
Yeah.
But it leads to a good point they make.
Yeah. A really valuable trading perspective from the summary. Thinking about the value of focusing on stocks that historically show that follow-through versus getting tangled up with stocks just chopping sideways.
Right. That makes sense. It's sort of an efficiency thing almost. Like we talk about sometimes, in the mentorship context, finding those instruments that tend to behave in a way that fits your strategy.
Exactly. Not that you can't trade ranges. Obviously, other approaches thrive there.
Sure.
But if you're looking for trends, it makes sense to focus on things that, tend to trend. It's a strategic choice based on observed behavior, not advice, just an approach.
Gotcha. Okay, so shifting gears a bit. The broader economic vibe today. The summary paints it as cautious optimism tempered by tariff uncertainties.
That tariff uncertainty phrase, it's definitely a theme.
It really is. And they give a specific example, right? Macy's, pulled from Yahoo Finance.
Yeah, Macy's reported. And it's interesting, they actually had narrow beats on Q1 revenue and earnings, so on the surface, okay?
Yeah, that sounds all right initially.
But, and this is the key part, they revised their 2025 outlook downward, and they specifically blamed potential tariff impacts.
Okay. So that's a concrete link between the tariff talk and actual business planning.
Precisely. And that's why it feeds into that broader market hesitancy the summary mentioned.
Yeah.
It shows it's not just abstract fear, it's affecting forecasts. It kind of embodies that caution.
Makes sense. And besides tariffs, the other big thing hanging over the market.
NVIDIA. Still NVIDIA. Their earnings report is coming up, highly anticipated. The summary says investors are basically holding their breath.
Yeah, that'll be a big one. What else is influencing things? The dollar.
Right, the U.S. dollar index. The summary cites CNBC data. It's down about 8% year to date.
Wow, 8%? That's significant.
It is. And it matters because, a weaker dollar generally makes international markets look more attractive for capital flows. Money shifts around.
Okay, so capital potentially moving out of the U.S. or into non-dollar assets.
That's the dynamic. So the summary's advice is, stay vigilant. These things is tariffs, NVIDIA, the dollar, they could really drive near-term market direction. They're not just background noise.
Got it. Okay, let's switch over to crypto and metals. Bitcoin, BTC. What happened there today?
Sold off a bit, down 1.82%, pulling back from those recent all-time highs we saw.
Pulling back. So is this just a pause or?
Well, the summary calls it a pivotal spot, which feels right. You've got sort of two camps, right? Some folks are likely taking profits after that huge run-up. Can't blame them. But others might be looking at this pullback as maybe a setup for another leg higher, a breakout chance.
So it could go either way.
Exactly. The summary puts it nicely. Whether it stalls and resumes higher or if investors are ready to dump, it's definitely uncertain. A real test right here.
Okay. And what about the metals? Gold and silver.
Also pulled back slightly. GLD down 0.23%. SLV, around 0.83%.
Which kind of fits the pattern we've been discussing, right? That sideways action.
Yeah, exactly. Continuing to stall sideways like we have been mentioning, as the summary puts it, we've definitely been tracking that consolidation.
So any specifics on gold?
Still above its 20-day moving average, and it's coiling in the apex of an ascending triangle, just like we talked about yesterday.
Right, that triangle tightening up. We highlighted that.
And silver, still above its 20 and 50-day moving averages, technically holding up okay. But it just cannot get through that resistance level. It refused to break through the $30.60 level on SLV that we've been talking about for the last week or so.
Ah, yeah. That $30.60 level, that's been the ceiling, hasn't it? We keep bumping up against it.
It really has. Been a key spot to watch. Very clear resistance there.
So, even when the main indices are quiet, navigating these specific situations, the triangle and gold, that resistance in silver, Bitcoin's pullback, it really highlights why having a disciplined approach matters so much.
Absolutely.
Mastering the analysis, managing the risk, picking your spots, like focusing on stocks that tend to trend well, as the summary mentioned, which ties back to things taught in good mentorship programs. It's about having that consistent process.
That structured analysis is key, whatever the market's doing, loud or quiet.
Okay, so let's try and bring this all together from today's summary. What are the main takeaways?
Well, we saw modest dips in U.S. stocks, kind of a slow day for the indices.
Right, cautious mood overall, thanks to those tariff worries we discussed, and everyone waiting on NVIDIA.
Yep. Then Bitcoin pulled back from its highs, sitting at that pivotal point now.
Yeah, profit-taking versus breakout potential. And metals.
Still stuck sideways, consolidating. Gold in its triangle, silver below that key resistance.
So the summary's quick version was, U.S. stocks down modestly, Bitcoin off its highs, metals stalled, caution from tariffs and NVIDIA. Pretty concise.
Does a good job boiling it down.
And this is why these details matter for you listening in. Because it's not just the headline numbers. It's the examples, Macy's and the tariffs, the dollar shift impacting global flows, the whole market waiting for NVIDIA, Bitcoin testing support, gold coiling up, silver hitting that resistance we've been watching. These specifics give you the real context. They connect the dots. Those are the aha moments, seeing how it all fits together.
Even on a quiet day, yeah.